Singapore has tightened safeguards over the years in the precious stones and metals sector amid concerns that gold, jewellery and other high-value items can be used to move or disguise illicit funds. But just how effective are these measures and where do the risks remain? For more analysis, we're joined by Athreya H D, who is partner at Forvis Mazars. Athreya, welcome to the show.
Thanks, Regina.
Well, first of all, how exposed is Singapore's metals and gem sector to money laundering?
The precious stones and metals sector in general itself is a high-risk industry, and it's because of the nature of its business and underlying product that it can be exploited by these money launderers. They can use it to change pricing, do manipulation there, also ease of portability to take it, and then it always retains its cash value as well. So these are some of the reasons why money launderers tend to use this as a tool. And if you're looking at Singapore's exposure in this, while Singapore is a global trade hub, the exposure is still minimal, simply because we have a very robust regulatory framework here. And also it's supported by an active enforcement and agencies which are constantly looking at the emerging trends to support this.
Yeah, so Singapore has a strong stance against money laundering. So why are criminals still trying to get around the system? Are there enough safeguards in place?
I mean, Singapore is a vast international finance center and also a trade center. If you look at it, it's a trusted economy with openness and a world-class infrastructure as well. So these kind of attracts the criminals itself to try and use these to launder money or essentially try and infiltrate the system itself. But then again, these criminals are also constantly evolving with their techniques. They're aware of the gaps in cross-borders and regulations. So they tend to exploit multiple ways, such as having intermediaries or having shell companies and stuff to try and launder money. But our government is on top of it. The regulators are constantly reviewing the risks out there and also updating our policies and regulations to match them. Especially if you're looking at FATF recommendations, we tend to adopt them right away. And also in terms of emerging typologies in money laundering or other risk, the regulators tend to be on top of it and adopt them right away and roll them out.
Yeah, so speaking of policies as well, the Precious Stones and Precious Metals Act, that's one of the key regulations tackling this in Singapore. How effective has this act been since it was implemented and come into force in 2019?
That's right. Back in 2019, it was introduced as a comprehensive framework for the PSMD sector, precious stones and metals dealer sector. But then it was just more of putting in the licensing and the registration requirements for them. Also, it was putting in obligations for customer due diligence and mandatory transaction monitoring and reporting. These were some of the frameworks that were initially introduced. The significant change or update happened actually a couple of years back in 2024, when they broadened the scope to include proliferation financing, also included tokenized asset classes like tokenized gold, and also included definitions for the products. This sort of enhanced the regulation itself to make it more effective. But in addition, this can't be standalone, because the industry is not standalone. So the AML workforce, which was set up by the Interministry, also looked at other businesses such as corporate service providers, real estates, and then put in measures and policies to cover those areas as well, thereby completing a full gap analysis and closing all the loopholes with the AML framework across the ecosystem.
I want to look at the smaller businesses in Singapore as well. Are they well equipped enough to tackle or to keep up with the regulations? Do you see a greater risk among smaller firms when it comes to money laundering?
I mean, to a certain extent, right? Smaller firms always don't have the leverage which the bigger firms have. They don't have the access to compliance personnel, dedicated compliance personnel, or large transaction systems. So they rely mostly on local manpower and smaller budgets. That said, Singapore government and the regulators have actually been helping these out to close the gap here. So they've been introducing systems for these small-time businesses to use and update so that it's not completely manual. They've been providing detailed guidance, structure, policies for them to implement and keep it sustainable. They also do outreach programs, which is actually educating them and making them realize of the underlying risks and impacts so that they're aware of what's coming and what's happening and stuff. So all of these are essentially measures which eventually will bring the sector to the maturity that it needs in the next couple of years.
Well, how else then can Singapore both enhance safeguards, but also on the other hand, make sure that they're balancing its growth as also a regional precious metals hub? How do you tackle balancing those two goals?
Yeah, I mean, that's the challenge, right? Because Singapore's objective is to be a well-regulated environment and for legitimate businesses to thrive. They do it in a few ways. One, they're on top of constantly monitoring the regulations, updating their policies, giving guidance. Next, I think what's key is adopting technology. And that's the answer because there's vast amounts of data involved. So use of technologies like artificial intelligence, machine learnings would help do data analytics or advanced analytics. This way we can be on top and do proactive supervision. So it's not always after things have happened, but understanding and then putting the guardrails in place much before. And then I think another one, which I already talked about, was the continued outreach, the education for businesses and people around in system, educating them and understanding, making them understand about the risks that the businesses are in and the businesses are posed, operating in a global market. That really helps. So continue to do that. Third point, lastly, conclude, is by partnership and collaborations. We've seen a lot of public-private partnerships where government has led and helped industries. I think it's to extend it further from cross sectors to countries. Especially Singapore in the region being the leader in the space should take the initiative to work with across border because money laundering is not a country issue, it's more of a global issue. So when larger groups come together, then you would have more sustained and effective solution.
All right, Athreya, thank you so much for sharing your insights with us today. I've been chatting with Athreya H D, who is partner at Forvis Mazars.